In today's video, I am going to be breaking down the two stocks that I am going to be purchasing once the stock market opens on Monday. Of course, you're probably seeing this on Wednesday, but either way, what we're looking at today is two amazing high dividend stocks that I think that you're going to absolutely love, and I'm going to give a massive reason as to why both are fantastic choices and which one I personally believe is actually a better choice over the other. So the first one is TransCanada Energy. This is actually TransCanada TC or TRP on the stock market. Now, why am I looking at this? Well, of course, the reason is they are apparently a leader in developing and operating energy infrastructures. We aim to leverage the size and scale of our energy network and trading platform to be the most trusted and reliable source of carbon-free energy for North American industrial, natural gas, and oil sectors, which basically means that they are purchasing solar panel farms as well as wind farms. They're going to be selling off potentially to the public, but mostly to those oil and gas companies. They also have a software platform so that they can do trading of that energy pretty much at any time. They also continuously purchase power farms, solar projects from, of course, right now Canada. We can see this in southern Alberta as well as east of Calgary in Alberta, and they are, of course, purchasing, for obvious reasons, renewable credits. And this is huge. If they can continue to purchase these massive energy farms, then this could be a massive green company into the future. And we all know that kids that are my age, and I call myself a kid even though I'm 30 years old, there's kids who are even younger than me who will not invest in companies who deal with oil and gas, which you would think also would include Apple because they use plastic. But either way, from there, this could be a massive boon for the stock price in the future if they continue to do these purchases. Next is Enbridge. Now, of course, Enbridge is a really interesting company for myself because, of course, they purchased their first wind farm back in 2002, and they have invested so far $7 billion into this stuff. From there, they have so far invested into 23 wind farms, 7 solar energy operations, 5 waste heat recovery facilities, which probably means they burn garbage and take the heat, and then, of course, 1 geothermal project, 1 power transmission project, and 1 hydroelectric, which, of course, is like falling water. But anyways, collectively, those renewable energy projects in operation or under construction and their 2,000 megawatt net generation capacity are enough to meet the electrical needs of about 940,000 homes. And remember, this is growing because this is what they said was so far, or to date, which means that they're going to continue to, of course, invest in this stuff. Based on net generation figures, which exclude our partners' stakes in the projects, and then if you continue to go down this fantastic page, you get to see where all of their renewable energy projects are, how many homes it serves, and you can see, of course, the capacity, the ownership. You can see a ton of it. Now, some of these they only own 17% of the farm, energy farm, whatever you want to call it, while others they can own upwards of 80%, and of course some even 100%, which is absolutely fantastic. So that would be for the onshore wind. There's also offshore wind. There's also, if you continue to go down, they have solar. And remember, there's going to be more and more of this type of investment, which means that guess what? A stock that I've already purchased, which is Tesla. Tesla provides solar panels. They also provide the batteries to those solar panels, and they also provide the software needed to be able to run renewable energy farms like the company Enbridge is currently investing in. So, if you wanted to have a fantastic green portfolio, even though it's not 100% green because it's Enbridge and it's oil pipelines or gas pipelines, guess what? They are slowly transitioning into renewable energy, which of course is what I am saying is the 100% future. So, get it now while it's potentially cheap, in my opinion. Obviously, do your own research. They have alternative, hydroelectric, and of course, they do have a breakdown of course, everything. I really do like this. You can also see they have power transmission projects. I personally really do like this. So let's look at their stock really quickly. We have TransCanada, who is with a 5.7% dividend, and they have a PE ratio of 29 at the time of making this video. Their average volume is 3.6 million shares traded per day. Now, remember that PE ratio when we switch over to Enbridge. When it comes to Enbridge, we are seeing a cheaper PE ratio. Remember, TransCanada only really has those two projects that we could actually make proof of that they have. And meanwhile, we see Enbridge, who has multiple projects of renewable energy. And to me, that is the future. So I think personally, for the future anyways, at this point in time, Enbridge is set up a little bit better than TransCanada. When we look at the TransCanada, I would say the chart, we don't really see anything that's crazy. We see a little bit of a spike before the pandemic. And then, of course, trading sideways once again, as it pretty much did before. We are seeing, of course, a four-quarter beat, and we are seeing a little bit less revenue last year, however, better earnings. We are also seeing, when it comes to the dividend, regular increases, which is what I personally really like as well. Now, Enbridge, in my opinion, is, of course, like I said, set up better, is the better option. They are a much cheaper stock when it comes to PE ratio. They're paying a much higher dividend at 6.5%, which is fantastic. And then, of course, they do have higher volume, so it's even easier to get in and out of, but I really doubt any of us are going to be buying 1 million shares at a time, so it doesn't necessarily matter at that point. The only thing is, of course, the stock market or their stock chart isn't exactly fantastic. So we've seen some regular increases. We've seen a nice breakout right before, of course, the downturn. At this point in time, we did see a double bottom, which is very handy to be able to see a very nice increase coming. Now, the only thing to really keep in mind when it comes to their chart is I think they're going to be trading sideways slightly, and let me explain why. So we're seeing a nice tick up. We're seeing, let me see if I can draw this line a little bit straighter. We're also seeing a nice line up here roughly. Now, it did dip below. Now, what does this mean? Well, this could trade sideways for a while, in my opinion. This could mean that there could be some downwards pressure. However, we could have already seen that right here. So this could be an interesting time to purchase, or this could be just a double bottom that, of course, could lead to higher increases. This is still a very interesting stock to me, and it is one that I'm currently considering buying a lot of, or at least a lot more than TransCanada. Now, when it comes to their dividend, I really like to point out the fact that they regularly do increase their dividends quite often, roughly about every year. Now, they did have lesser revenue, and the earnings wasn't exactly a massive takedown versus 2019. So, of course, in my opinion, this is still a very good company setup. The last 2 quarters were better than the first 2 quarters, so over the last year. So to me, this seems like it's starting to turn around. We could be seeing higher revenues as we were before and higher earnings as we've seen before the pandemic, which is promising. So personally, Enbridge and Tesla together might be a fantastic combination, which is interesting because one's an electric car company and the other one's an oil pipeline. But either way, Tesla doesn't have a dividend, but Enbridge does. So if for example, invested, let's say, $1,000 in Enbridge and $1,000 in Tesla, technically you could split the dividend and say, 3.25% is from Tesla. But no, either way, you're looking at Enbridge is setting itself up, which is fantastic for the future. It's setting itself up with solar, wind, and a lot of other stuff. Meanwhile, TransCanada is starting to kind of wet their feet in the renewable energy side of things, but they're still more focused on pipelines. We're going to need oil over the next 20, 30 years no matter what. People are going to be driving classic cars for a very long time. We're going to be needing plastic for a very long time. We're going to be needing oil in general. We all use plastic wrap. We still use that. Everything like that is still made by oil. So, in my opinion, this seems like a very attractive entrance to get into these stocks, Enbridge being a little bit better than TransCanada. I hope that you've enjoyed today's video. I want to know your thoughts on this. Leave a comment down below, and I'll see you guys again next time.